Cameron Brandt is Director of Research at EPFR Global. They track fund flows across markets. Cameron, great to have you with us here. Good morning. Thanks very much for your time. How are flows to global emerging markets looking? I mean, just you guys have weekly numbers, but just sort of stretch that out a little bit and put the latest numbers into context. Are we at highs? Are we middling in the middle, or are we at lows? Where are we contextually speaking?
Middling, but that's probably better than expected given the ongoing tightening that's occurring in the US and Europe, and the genuine fears that we'll have some kind of a recession, certainly here in the US, by the fourth quarter, which is probably not good for emerging markets. I will say that once again, flows to China-dedicated funds are accounting for a very large amount of the headline number, between 60 and 80% in a given week. So it's positive flows with a distinct tilt towards China. I would say in runner-up position, though, Indian funds have been doing very well lately, 9 straight weeks of inflows, and those inflows have been of a higher level than we've seen in a while.
Sorry, 9 straight weeks of inflows into India dedicated funds?
Mm-hmm.
Okay, that's interesting. But the bigger thing will happen when global emerging markets start to get money, right? Because this is still a small portion of how we get foreign inflows. India dedicated funds, that is.
Right.
But you're saying that is getting money.
Right. Yes. It's usually when the big diversified funds start to get serious money, their large allocation to India translates into a significant pickup in flows into Indian equities.
Okay, got that. That's good news for us, Cameron. Just want to understand whether the money movement is showing any irregular patterns or, patterns that we should note, given this impasse on the U.S. debt ceiling. Are you seeing any interesting, for instance, there was some rotation out of treasuries. The yield has now climbed back to 3.7%. But any interesting trends, given that, there's no deal as yet?
Right. So what has been interesting is that we really haven't seen investors step away from U.S. bond funds. The level of flows is relatively low, but it's remained positive right up until the current week. We are seeing, I think, some of the interest in Europe bond funds is driven by a desire to rotate to another developed markets universe of debt. And we've seen very consistent inflows into Europe bond funds despite a number of headwinds there. On the other hand, I would also say I'm not actually that surprised for all the sound and fury. I've now seen quite a few of these debt ceiling standoffs. The sky usually falls a bit later than the headlines and the advocates and the politicians would have you believe. I suspect that the real crunch point probably isn't until July, late July, even into August. I think there's enough rabbits to come out of the hat to get us to mid-June, which is one of the estimated tax payment points. So there'll be an influx of cash to the Treasury then. So I'm not actually expecting to really see significant movement probably for another couple of weeks.
All right. Good to hear your views, Cameron, on both equity flows as well as on bond flows. What about gold-dedicated flows? Gold prices, they have been quite firm, but any observation on that?
Yes, we are sort of finally starting to see pretty consistent inflows into gold funds. I was slightly surprised last year at how slow, given the uncertainty, people were to turn to gold, certainly through mutual funds. But we're now seeing pretty consistent flows into the gold funds that we track. We're also seeing people turn to cash. The big winners, certainly over the last 2 months, have been the big liquidity funds, the money market funds, close to $600 billion year to date. So people are certainly, I'm not going to say sell in May and go away, but certainly the significant defensive action in the fund flows at the moment.
All right, Cameron, got that. Thank you very much for your insights, always helpful. We appreciate you taking out time today. We'll take a break on that note. On the other side, our list of top stocks to watch out for this Tuesday morning.